Hey guys, welcome back. In today's video, we are talking about how AMC shorts are liquidating, how some shorts are buying AMC, the Citadel warnings, and many more in this video. First, we're taking a look at this. So just in, hedge fund that shorted AMC is now liquidating. So for those of you who may have only seen this particular post where Blackstone-backed Antara Capital is pursuing a wind down with plans to liquidate its remaining investments. So this is what we have to understand. Firstly, it's about Antara Capital and the fact that they are, of course, liquidating. And now they were, of course, a previous or at least a short seller of AMC. And so if you want to take a look at a more detailed description, firstly is the AMC victory. Wall Street firm that bet against fear to change is now closing up shop. So we have to understand that they were backed by Blackstone. So that should have already shown in terms of how big they were. Not only that, is that Blackstone-backed investment firm Antara Capital is shutting its doors and liquidating its remaining holdings. We also have is that Antara, which once proudly managed 2.8 billion, encountered significant financial challenges after making high-risk wagers against beloved community favorites like cinema powerhouse AMC Entertainment. The fund began restricting investors' withdrawals in 2023 as losses accumulated. So we should already understand just how much power we have, right? And we've seen, now this is just another trophy that's on the wall right now. Antara Capital isn't the first AMC short seller to, of course, go down. We have seen plenty in the past, and they definitely won't be the last to go down. But this is what we've said with how they can kick the can down the road. They can hide these short positions. They can make it look like they are doing well, but they can't get rid of the inevitable. When it comes to the time, they don't have the money anymore. They don't have the capital, and that they need to pay back the investors. They will be force liquidated, and that's exactly what we are seeing here. Remember the fact they had over $2.8 billion, and we're seeing most of that to be going right now. So we're obviously looking at the firms with the lower capital to be going out first. The reason why I say this is obviously 2.8 billion is a lot of money. But when you compare it with some other big short sellers that are backed by bigger banks, we're talking about Bank of America, which are lending out hundreds of billions of dollars, then it's obviously way bigger than 2.8. And so in retrospect, 2.8 is obviously a smaller number. So for dedicated AMC enthusiasts who rally behind the fear to change during the retail investor revolution, Antara's dissolution represents a meaningful triumph. Many view it as a well-deserved consequence after Antara positioned itself against AMC by shorting AMC's thriving shares, offloading millions of AMC's valuable preferred equity units, structuring complex financial arrangements, betting against the cinema leader's success. So we obviously know the history about this, but this is really highlight that anyone who's trying to short against AMC right now and claims that they are doing well, claims that they have made millions and billions of dollars of profit, are clearly not true. We are seeing people who supposedly are making these great bets, these great short trades against AMC, yet they've all gone out of business. Now, there are some who obviously claim that they've made hundreds of millions from AMC shorts, yet their revenues are going down, yet their profits are going down, yet they still need to borrow even more money. So this is what we are looking at. And you can see even prestigious funds can falter when challenging passionate investor communities. That's to really just talk about just how strong the community is. But like we've said, this is a very, very big step. We've seen this in the past. We're seeing it again. I definitely think that we're going to be looking at this more in the future. But we have to understand, as we are taking down more and more of these short firms, we're relieving the pressure. We're putting more pressure on the short. So we're relieving the pressure of the retail, and we're putting even more pressure on concentrated short. Because more and more firms are out, it means that the pressure needs to get spread out against less firms, meaning that the Citadel are now in need of an even higher capital because of what's going on. Furthermore, you can also see this. So we just talked about how because we are seeing these short sellers go out of business, the remaining short sellers are faced with more pressure. And you can see how they're trying to combat this pressure. Susquehanna has just purchased shares of 299,000 AMC shares. So firstly, we saw short sellers of AMC to go out of business. Now we're seeing short sellers of AMC to be buying AMC shares. Now, we aren't, unfamiliar with this. We've seen this in the past before as well. We saw it when Goldman Sachs did it. We saw it when Citadel did it. Essentially, that's because they are aware of the risk that is there right now. They are aware of what is about to happen. They understand that when we squeeze them, they will have to pay, thousands of dollars for a singular share of AMC, or maybe tens of thousands of dollars, or hundreds of thousands of dollars for a share of AMC, right? And they understand that. And their way of hedging it is by being able to buy up the shares as much as possible right now. And that's exactly what they are doing. One of the things we've always said was how these short sellers have always wanted the shares of AMC. AMC has been extremely undervalued, and so they've always wanted to buy shares, but they realize they can't purchase real shares because retail's holding them up. They realize that there aren't that much shares flowing in the circulation, and so that's why they always try and create these news. Like we've said, you're seeing these news that are saying you should be selling AMC, that AMC is going bankrupt, yet you're seeing AMC shorts to go bankrupt. Yet you're seeing AMC shorts to be buying shares of AMC, institutions buying AMC as a whole. So clearly something is not adding up here. And this is what we've talked about with just how powerful AMC is. And if you really want to understand just how undervalued AMC is, you can take a look at this. How long can they keep this up? So if you take a look at the 1 year returns, so we're looking at 3 different companies, which again are in the same industries, obviously Cinemark, IMAX, and of course AMC. So the 1 year returns for Cinemark, as you can see on the screen, 70.99%. For IMAX, 48.77%. Now, of course, both of these are positive, so they went up these respective percentages. But for AMC, we are in the same industry. We are profiting from the same box office, meaning that because box office is helping Cinemark, box office will help AMC as well. We have a better business structure. We have more cinemas than them. We are in fact the biggest cinema company in the industry, yet we're down 18.79%. Clearly, something is not adding up. Now, we talked about the suppression. We should know that this is manipulation by now. But this is really just to highlight just how undervalued it is. By understanding that cinema stocks are going up, by understanding that these theater stocks are going up, we know that AMC should be going up. The very fact it's going down shows that we are not seeing the true potential yet. And so firms like Susquehanna, firms like all of these other institutions, they see it as well. When shorts are buying to AMC, it's because not only do they realize the fundamentals of AMC, not only do they realize the potential of AMC, but it's because they are also scared of the squeeze, and they understand the squeeze is coming, so they need to position themselves. But for institutions who aren't short against AMC and are still just accumulating millions of shares, is because they realize just how undervalued AMC is. And if we take a look at this, you can even see why AMC is down 18.79% when Cinemark is up 70.99%. Because at this point, AMC isn't even trading on the NYSE. 85%, 5 days pinned at 271, equaling a 1 trillion chance, so a 1 trillionth of a chance of that happening. It's absurd, and is evident that shit hedge funds made the bet they can't cover. So we've obviously talked about this with understanding just how much the dark pool is being used to abuse AMC, to exploit AMC, and that's what we are looking at here. And so if you want to understand why is AMC undervalued in comparison to others, it's not because investors don't think AMC is a good company. It's not because investors are selling AMC. It's because the ones who are buying AMC, their orders aren't hitting the lit market. Therefore, it's not allowing anything to be showing in the price action. And when you take a look at the fundamentals, like we've said, AMC's fundamentals are doing very well. And especially with all the movies that have been released recently, you can see this year's Q2 pulls further ahead of last year, more than $500 million ahead in just 34 days, plus 121%, more than double last year at the same day. So you should understand how AMC have positioned themselves very, very nicely. And now we take a look at this. We're saying Citadel now warns SEC of dark pools and risk. So we talked about this previously, and now we're seeing them talk about dark pools as well. Now, this is extremely ironic because we know that Citadel is a short seller of AMC. This is something that everyone knows. We also know that Citadel internalizes their trades of AMC. And we've just shown you this picture of the dark pool percentage being 85%. The very thing they're using to manipulate and suppress AMC, they're trying to warn the SEC of. Now, clearly there is something more to this, but it's just extremely ironic. But one thing I want to highlight is that recently Citadel has been very vocal about many things. And I think that right there is showing that they are not in a very good position. And so we obviously have to look out more for it. But yeah, guys, thanks for watching the video. I'll catch you guys next time.